All right, so now we're going to do a walkthrough on pound dollar. Now, one thing I just want to preface before we dive into this, as you'll see tons of examples of this, but pound dollar absolutely loves to sweep liquidity, and it loves to have inducement before it zones, right? So if you've, probably the majority of you have been following along and also doing, the majority of your markups on euro dollar and really studying and diving into the price action on there. But if you start to look at, a pair like pound dollar, of course, all of the same concepts apply, but sometimes the behavior of an individual currency pair or even in different asset classes, they can have slight different behavioral tendencies. And as you're about to see on pound dollar, it absolutely loves to sweep liquidity, and it loves to come back to sort of those origin zones, those extreme zones of the move that took liquidity, those sweep zones, for price to then come back to and mitigate. So this is definitely a pair, if you're going to look to trade it, that I would definitely get very, very comfortable with liquidity and really study and see how it loves to move. So again, what I mean by that is, let's say we have a sweep zone, right, that takes the lows and then takes the high like that. All right, you can obviously have decisional zones that are somewhere up within this leg, around about halfway, and then this zone down here is what we would refer to as the origin or the extreme. And you'll see that a lot of the times pound dollar loves to come back down to this extreme zone more so than the decisional. Now, of course, it's not just a hard and fast rule. You can't just always assume that price has to come back to this extreme. There will also be a number amount of times where price will react from the decisional. So this is just where we never know for certainty. We just have to play the probabilities game. We have to stack as much confluence in our favor, and then just try and decide which POI we want to focus on. Now, when you're first starting out, kind of a more simplified rule or kind of technique you can use to kind of help you when you have multiple POIs and you've tried to refine them, but they both kind of have a lot of confluence and you're not quite sure, is what you can do is you can play the reaction to the decisional and then you can trade the extreme directly. So what I mean by that is you could literally just set a limit order on the extreme down here, but then if price comes back down into here, into your zone, and you drop down on a lower time frame, or of course you could view it on the same time frame that you're looking at, wait for those entry models right, and then you can look to trade the reaction from here. But you just have to be aware that that could be a short-term reaction, just to then build more liquidity right below these lows for price to then come down and sweep, tap into this sweep zone here before then that real move goes right, taking this liquidity here. But anyways, we'll dive into this as we go through the monthly chart now. So monthly chart on forex.com, the data doesn't go back that far, it only goes back to 2006, but let's just work with what we have. So based on this, we're clearly in that sort of more longer term, larger bearish monthly trend, right, where we had this pullback here to form a lower high, taking out those lows there to form a lower low, and at the moment we are potentially just pulling back to potentially go on to form another lower low, right? But even just looking at this kind of small amount of price action here on the monthly chart, we can see the kind of liquidity concepts in practice, even just in this alone. So what happened when we initially had this bearish move back in 2008, price then pulled back, right? It tried to form that lower high, so it tried to move down to then form that lower low and take out the low, but it failed to do so. So then what do we know? We know that this is likely to be a weak high, right? Because it's failed to take out the low, so we know it's likely to get run. So then we chop around for a number of years. So what's that, from 2009 to about 2014? So about literally 5 years. We just start ranging in between that internal high and that internal low. And what does that mean? It means we're building tons of liquidity, buy side liquidity above that external high, tons of liquidity below this low here, right? And price does not move. We don't get that continuation until literally price just sweeps the high, taps into that buy side liquidity, and then that large big supply comes into the market from that big money to eventually then push price on to come down for that lower leg, right? And even on the way down, what do? We sweep, I should say, those mini equal lows there, right? What do we know after sweep of liquidity? If it's pro trend, it's likely to just give us that pullback, right? So after a sweep of liquidity, we generally will get some form of a retrace or a reaction. In this case, because it's pro trend, it's likely to be just a pullback rather than a full-on reversal, just for price to then fuel the next move there to the downside, right? Taking, of course, we have trendline liquidity there, so on and so forth. And then price comes down, we pull back up, we mitigate this area of supply, right? And then we've come down and we've tried to take out the low. Now on its first attempt down, it didn't even wick the low, right? It didn't even break it whatsoever. Price then retraced, giving us that nice, really obvious sort of double bottom in the market. And then what happened? Tons of liquidity built up below here, right? That sell side liquidity. Price then came down, tapped into all of that liquidity, and then the big money, in theory, right, stepped in to absorb all of that sell side liquidity to buy into, and eventually we saw that overwhelming amount of demand break up this minor breaker structure to the upside, right? So we did initially have a bit of reaction to that minor area of supply. We reacted, but then we flipped there to the upside. And now at the moment, we are struggling to break sort of this more extreme monthly reaction zone there, supply zone there. So at the moment, long term, I would still say the overall trend is still very much bearish and sort of that more monthly to quarterly time frame. However, we do have to be aware that we've had a massive sweep of liquidity here, right? We are starting to break structure to the upside. So I think if we can start to try and clear these highs with sustained momentum, then potentially we'll see another longer term move. But of course, yeah, if we kind of struggle to break these highs here, then very much we could be starting to pull back either down and towards this flip zone here, or potentially down into this extreme sweep zone. As we know, pound dollar loves to come down and mitigate those areas. So that's kind of where we're at with the monthly chart. Now diving into the weekly chart, we can very clearly see at the moment that we're struggling to break this pretty clean weekly supply zone up here at the top of structure. So let's put that on as our weekly zone. Now, what do you notice about this zone? Why was it a strong zone? Number of reasons, sort of the more obvious one being, right, it's right at the extreme. We know these zones are always going to have a pretty decent reaction, but kind of more what's relevant to this video is it's a sweep zone, right? It took the liquidity sitting behind that high, swept that liquidity, and then that fueled the move to come down and eventually break those lows down here, right? So that's a pretty damn strong zone. That's why we saw such a violent reaction initially when we came into there. However, for me at that point, price is bearish because if we look at the recent trend, right, we came down and we started to break structure there to the upside. So that for me is a weekly break of structure. I don't have a weekly template saved there. I don't usually always draw them on. I'm more, as you guys know, tend to just mark out whatever current range we are within, right? So I'd mark that out as my weekly high, and then down here would be my weekly low. So let's just quickly line this up. There we go. So price tapped into our area of supply. It tried to pull back, right? And then we started to form what looked like it was going to be that weekly high low because it tried to then go on and break that high. But as you can see, it just wicked that high, tapped into the external range liquidity sitting behind that high, and then that was enough to then fuel that move back to the downside. So as we started to sweep that high, and then as we'll look in a minute on the lower time frames, as we started to break structure to the downside, just like euro dollar, right, pretty similar price action, they gave us a very strong indication that this was a weak weekly low because it failed to do its job. So then price was going to come down and we could look to target that for price to at minimum run that low, right? Now what's happened is price has swept it, tapped into that liquidity, and we've had a pretty aggressive sweep and retrace back inside. So now there is a good possibility, just like euro dollar, that now the weekly higher low may be in place and we can look to start to target that higher high forming. And obviously we left some pretty nice equal highs there, right? Relatively equal highs. We know there'll be tons of liquidity sitting behind there for price to potentially want to tap into for that higher high. Of course, there's no guarantees, right? We have this whole weekly leg, right? We're still pretty much, in the premium of this leg, and there's possibilities we could come down to some of these more extreme zones down below here, especially as we're coming off a very nice weekly sweep supply zone up there. But like I said this time and time again, I literally have no idea which way price is going to go. I don't care, right? I just follow my systematic sort of mechanical framework of identifying structure, where we are within each time frame, if each time frame is bullish or bearish, piece the puzzles together. And at the moment, the weekly for me is still bullish. I'm aware we are coming off supply, right? So I'm aware in the back of my mind we could break down lower, but for now we're still bullish. We've swept the liquidity below that low, so I am looking for that weekly high low to form at any point. So on the daily chart, we can see that price action a little bit clearer. So let's mark on the daily range that we were within. We can obviously see this larger weekly range, but if we just kind of paint the picture from where we had that last true break of structure, and for me, that was where we had that daily pullback over here. So just clean this up a little bit. I'm going to get rid of this weekly high and the weekly, well, we can just leave it there for now. Also going to rein in this weekly zone just so we can kind of focus on the price action. So we had this daily pullback here, then we made that higher high, and then we've been pulling back ever since. So this was that that daily high, right? Price then pulled back into our area of daily demand. So if I refine this entire daily range, right, we can take the whole range, or we can refine it to that last candle, right, that then led to that break of structure. We can see that price pulled back into here, and then it tried to make that higher high. It failed to do so. swept that into external range liquidity, right? And then we started to break those internal lows to the downside, which just similarly to euro dollar gave us a strong indication that these lows were going to be weak. So then we can, have a reasonable sort of high degree of probability that price is likely to come down and want to run these lows here. Now, even back here when these lows initially formed, right, we could always kind of view this with quite a bit of suspicion because it didn't form like how a very strong low should form, right? So what do we know about kind of strong swing highs and swing lows? They should form like this, right, with a pretty kind of sharp, aggressive move away, because that shows, the big money stepping in. But what happened here is we pretty much left perfect equal lows there, and we know that that is likely to have a lot of liquidity, right, for price to come down and take those lows out. So kind of whenever you see that, it's pretty suspicious, right, that is not going to be a strong low that is going to hold. But this is what I was saying, right, in the theory video, that at this point here, when we see that and we start to get those kind of minor breakthrough structures to the upside, we've come off a level of demand. Yes, we can see those equal lows there and we can be suspicious of it, but that doesn't mean that we have to wait for price to be swept and then miss out on all of this potential opportunity here. We don't have to sit on our hands, right, until this move happens here, okay? So that's what I say, kind of react to liquidity being swept. Don't necessarily always, predict it and let it put you off taking positions if you see kind of, other pieces of positive confluence that, is then worth enough to look to take those long positions here. So then once we swept that high, we failed to break up above. We know these lows are very likely now to get run. What do we also know about this demand zone? Well, if we're being very, very kind of strict and true to how demand zones should, technically be drawn, it should be on the last bearish candle before the bullish move, right, that breaks structure. But in this case, we drew it on the bullish candle before the bullish candle. So what we can do is we can refine that, right, to the fractal refinement, to the fractal wick, because it's very likely within that wick, there will be that lower time frame, right, sell before the buy, that break structure. So now we can see that we have, that fresh, unmitigated fractal refinement. So I'm just going to drag that across to over here. So sorry about that. You could probably maybe hear my puppy howling in the background. So I've just gone and sorted them out. So hopefully there should be no more interruption. So yeah, as I believe I was saying, we have refined this daily demand zone down to the fractal wick. And what do we have about the zone, right? Why is this a good zone? Obviously, we can see with the benefit of hindsight, it played out. But we were at the time, right, waiting for price to come down to here, knowing it was a very high probability zone. For a number of reasons. One, we have literally perfect equal highs in front of it, right? Nice piece of inducement there. All right, so there's your inducement. But then how was the zone created, right? It's a pretty strong sweep zone where we took the liquidity sitting behind those equal lows there. So we knew it was very high probability that this zone was going to hold, because this is still our daily strong low, right? It did still take out that high, and this is the bullish range we've been in the entire time. Yes, the move went up to try and make that higher high and it failed to do so, but then it's these lows that become weak. Prices then come down to sweep that liquidity and tap in towards the fractal refinement of this zone. And that's why we've had such an aggressive move in and aggressive move out that has now given us that internal break of structure again to the upside. So the swing range is still bullish, but now the internal price action has switched bullish again, right? So now there's a good indication that we can look for that internal daily higher low, right? To now try and see if we can run those big equal highs up here to form that higher high. So very clean price action there on the daily chart. Let's go and see how that looks here on the 4-hour chart. So if you come and look at this zone, right, you can see that sweep zone pretty much in perfect formation, right? We had these nice equal lows here. Price has swept those lows and aggressively moved to the upside, right? And then took the liquidity that was building on the top side there of the range. So what we can do is now refine this candle here and drag this across, and you'll see how price then had a beautiful move away from there. So yeah, let's just kind of look at this sort of more recent price action and work our way through and take a look. So for our chart, we had this pullback from this higher high. That would have been the high, and then we didn't break it until here. That's when we tried to attempt to make that daily higher high. So then the lowest point for me would be this low here, and then we didn't close above that until here. So then that would be one leg down, right? Then we pull back up, and then we didn't close below that low until here, right? So for me, the highest point from that pullback would be this high here, and then that would be the swing low. So I'm just going to draw those drawings, get rid of those drawings, I mean, and then we'll put in that last break of structure there to the downside. All right, and then we are clearly within this bearish range. Now, one thing you'll find about pound dollar as well, obviously talked about liquidity, but I have found personally that being a little less tight with how I kind of define structure, so kind of looking at those more larger swings in price action, tends to work better for me with pound dollar compared to euro dollar. So I'm reasonably a bit more aggressive with my structure in there, a bit more tighter, whatever way you want to describe it. But with pound dollar, I often find that kind of just, looking for those kind of more obvious swings in price action can kind of, help to prevent you getting chopped around. Now, of course, you can draw structure the exact same way on here as you have done on other pairs such as euro dollar, but you just kind of have to accept that the trend is going to be changing a lot more frequently for you, because price will be breaking those sort of more minor highs and lows quite often, which you may define as your swing structure. So just make sure you kind of practice with it, and you'll start to get a feel for it and see what works for you. Sorry, I can't get my words out now. But what's the number one rule I always say? Whatever way you do things, just make sure you always do it that same way, right? Bring consistency in your approach to the randomness of the market, and that is how you then can keep that edge and have data to back up that same approach that you are always bringing. So well, obviously within this bearish leg, price then pulls back up towards sort of more the EQ of that range to then reject this supply zone here, right? So this zone here, for instance, yes, we get a reaction, but it's not necessarily somewhere we're going to expect a lower low to form, because it's not in it's not a well priced zone. It doesn't have any inducement in the leg, right? It's just pretty much a clean push. So what ends up happening is this level becomes inducement, and then that reaction ends up building those equal highs to then provide the inducement for this zone here, right? And then that's where we see that next swing leg to the downside there. So then if I drag this zone across, we then get our next 4-hour break of structure. And then the exact same thing, this is one big leg down, right? And then we get this pullback here. So price pulls back, and then we just get a bit more of a complex pullback. This ends up just providing inducement for then our 4-hour supply zone up above, which is where price eventually ends up reacting from. So just drag that across, right? And you can see it again. Inducement before the zone. Whoops, delete the wrong thing there. So we have inducement, but then what also do we have? We have that area being a sweep, because it ran the liquidity behind these highs, right? Just pipped that high there. That's a decent sweep zone. Came into this area here, right? This area of demand will obviously be a bit more significant on the lower time frames. So we sweep the high, price comes down into the area of demand. We get the buy, tries to make a higher high. It fails to do so because supply then steps in, and that leads to the flip, the change of character, and eventually that swing break of structure. So we have a sweep zone, a fractal flip zone, right? If you take the whole buy to sell wick, so of course we've already had that reaction from here. Right, so initially you may have had it drawn like that, which is definitely valid. And this is why, right, when price first pulls back into here, we sweep liquidity here. This is more than valid. We can start to look for entries to take this short, and we can start to try and run that low. But as price comes down here, and then we start to see changes of character on the lower time frame, and we start to pull back up, we don't want to be getting short from this supply zone, because it's failed to do its job, right? It's failed to take out this low, so it's very likely that this is going to be a weak high. It's going to get run, and then we can refine our 4-hour zone, to just the wick. Obviously, a bit clearer in the 15-minute time frame and so on. We know that's now very likely going to be inducement, and then we can look for our entry models within here to now run all of this sell side liquidity, right? That's building up below these lows, below the trend line, to then target that next swing leg to the downside. Okay, so let's actually take a look on the 15-minute chart and take a look at how all of that price action played out, and you'll see, right, being a bit more loose with your 4-hour structure definitely tends to work a little bit easier with price action, because if you kind of define this a little bit tighter, and then you were kind of looking at all of this thinking we were bullish, right, and then that we've got a higher high there, then you'd be looking to get long here, but in reality that's not the case, right? So this is why this zone just gets smashed through, and the 4-hour isn't bullish, because this whole time that is the one swing leg down, and this was just a complex pullback, right, to form that lower high, and then we got that lower low there. So let's have a look on the 15-minute chart, back at this price action. All right, and you can see as we run this high here and we come up into this 4-hour supply zone, again at first range this can see some well, it is quite complex structure, and you can end up getting chopped around here if you don't kind of define your swing structure consistently. So how I would probably personally approach this, there's kind of two ways you can do this. One, you can be, very, very loose and just want to really see those obvious swings in price action. So if you are, more suited to that way and it makes more sense to you, then you would see that as the first pullback. And then all of that move there would be one push up on the M15. So this bit of this pullback here would not be enough for you, and you would define your swing structure that way. So then when we pull back here, we are playing within this high here and this low here. So the M15 would not switch bearish until this point here, okay? And that's definitely more than valid. Or how you may view it is that actually this is a significant M15 pullback, right? So we'll kind of look at this more slightly tighter approach. So that would be an M15 break of the high. Then we get an M15 break of the low there, right? And then that would be a pretty decent push down. We do then take the low here. So we'll just draw that on. All right, so you can see here, if you're being a little bit tighter with structure, your trend will change a lot more, because that means we take the low, then we take the high, but it's a pretty clean, straight push up. We then come in and we mitigate this zone here, right? But it's just enough for a little bit of a pullback, and then we break up higher, but we fail to close above that high, right? So we're still bullish, but then price comes down and eventually it takes out this M15 low down here, and now we are bearish. So we tapped into that 4-hour area of supply, right? We swept that 4-hour inducement, that previous week high that became inducement for the 4-hour refined zone, right? And now the M15 over here has switched bearish. So that's kind of, if you're a bit tighter with structure, that's how I would have arrived at that point to here on the 13th of July, as having the M15 as kind of confirmed bearish again. But if you're a bit more loose with your structure, then the M15 wouldn't have been bearish until, right, this point here. So that would have been your swing low, and this whole time you would have just been waiting for price to then come down before it confirmed bearish. But obviously if you're a bit tighter, we would have been bearish here, but then we switched bullish again before switching bearish, okay? So kind of just wanted to show here as a good example of how you can, you can not get full signals, but the trend is going to change a lot more often for you if you kind of are a bit more tighter with price action compared to if you're a bit looser, for lack of a better phrase. But just make sure you are consistent in how you do it, right? So either way, whichever way you define the structure, at this point you would have this as your lower low, and then the highest point, if you're a bit tighter, would be this high here. All right, so I'm just going to draw a line across. Or if you did it that looser approach, it would actually be this high all the way up here, because remember, that would have been your break of structure. Whoops. That would have been your first break of structure there. So where is the highest point before this low broke? That would be high there, right? So just be a little bit higher. But let's just stick with the way we've got it now, just so we can try and keep this as simplified as possible and not get too confused, okay? So this whole time, I would have that marked out as my M15 range high, and this would be my M15 range low there, right? So this is kind of what I mean. If you suddenly jump on the charts, right, and you don't paint enough of the story and you're jumping around here, you're going to be defining the structures all over the place. So like, okay, we're bearish, okay, now we're bullish, now we're bearish again. It's going to be all over the place, and you're just going to get chopped around, when actually you need to make sure that you have gone back far enough to make sure you know where your swing high and your swing low is. So this whole time when price is pulling back, you can play all of these counter trend moves, but you have to understand that the pro trend trades, the pro M15 trend is going to be to the downside. So we come up here, we mitigate an area of supply, right? We try to move to the downside, we try to take out these lows here, but we fail to do so, right? So then as we come down and then we break structure to the upside, at this point here, it's very, very, very likely, not guarantee, but very likely that this high is going to get run because it failed to do its job. So what happens is this high here becomes inducement. We know pound dollar loves to do this. Sweeping liquidity before the real move starts to kick in, and then we mitigate very clear flip zone over here, right? Flip zone, because what do we have? We have some minor demand. Price has a high, comes back into demand, it reacts, and then we get our flip and change of character, right? So very, very decent zone, sitting above liquidity, get that inducement, and now the real move is starting to take off, and eventually then we come down, sweep those equal lows there, and we get that confirmed lower low, right? And then that becomes our next, sorry, not that high there, this high becomes our next swing high, as that's the highest point before the low broke. So in theory, this M15 high should not break. So we tap into that external range liquidity sitting below those equal lows, and we start to get that pullback, right? We only expect a pullback, right? Because it's a sweep that's with trend. Whereas if we kind of came up here and swept that high and came back down, we would then expect, right, that full-on reversal because it's with the M15 trend at that point. So again, if you see this breaker structure to the upside and you're starting to kind of look at these lows down here, yes, it is possible to trade this and you can take it, but you have to understand that it's counter trend, and that's why price ultimately only ends up reacting just to provide more liquidity, right, to then fuel that next move to the downside, right? And it's all about understanding where your swing highs and your swing lows are, realizing that this is just becoming inducement for our supply zone up above here, right? I can get the zone to draw on properly, and then we get that move to the downside there. So if you were looking at longs from here, you just kind of have to manage your expectations and cover your risk a lot quicker, knowing that we have just swept liquidity and we've come off a zone more towards the premium of prices there. So I did just kind of want to cover that section of price action here, because depending if you kind of very, very tight and aggressive with your not your management, but with defining structure, all of this can be quite complex structure, especially in here, and you can get thrown around a lot. It can be very confusing whether you're bullish or bearish, and you can be trading, supply and demand zones within here, and you can end up just taking a lot of losses, or price only moving a little bit before it's reversing, and it can get very, very confusing. So if that ever happens, just zoom out a little bit, try and paint the story a little bit better, or further back, just to make sure you've got your highs and lows in the right place. Or, another tip is to just be a bit more looser with the structure and look at those more obvious swings in price. So we'd be bullish that whole time, try to make a higher high, fail to do so, then we're bearish, right? And then we're playing within this bearish range. And then that clears everything up for you a lot more. I mean, even in here, right, you can see every time we sweep liquidity, we get a retrace, we come down, we sweep these lows here. We get a retrace right below those equal lows there. I haven't drawn it very clearly, but as you can see, right, retrace back in here, sweep those equal highs there, mitigate something that's left within those wick for inducement. Then we run the low, so we sweep the liquidity below that low, but we also tap in liquidity below these lows here, right? That then fuels a move to the upside. We then sweep that inducement, right, for this zone up here, and then that's eventually enough to fuel the move to come down. But obviously, as we sweep these lows here, right, where there's more liquidity building up, we then get another pullback before eventually we get the move. But even there, what did it do? It pulled down, swept the liquidity, and then we go. Pound dollar loves to do that, right? It loves to looks like it's forming that lower high, and it comes back up, sweeps the liquidity that had just built behind that lower high, or that kind of fake lower high, and then it goes. Okay, so yeah, let's just go back up to the 4-hour time frame. So yeah, that's kind of that whole section of price action, and the whole time, if you're kind of just a bit more loose with the structure, you can understand what's going on. That whole time it was just that 4-hour complex pullback, right, into supply to then look for that real move down here, and then that's when we came down in towards sweeping those weak lows and down in towards our 4-hour and daily sweep zone down here, and then we saw that aggressive move away. So yeah, that was looking like to be a very, very good swing position to look to get long as we came down in towards this zone. Let's quickly study this on the M15. Unfortunately, I can't go back this far on the M1 as the data just does not load, so can't quite look at super refined trade entries. But even just looking at the M15 structure, there's plenty of here for us to study and understand. Because what do we get? Price comes up into the kind of last sort of major area, I would say, of supply. It reacts. Right, the reaction fails. We don't get the change of character until kind of over here. So now we have our flip and our change of character, and then price comes back in. And again, what you love to see in pound dollar is it loves to sweep lows, right, before we then get that real move. Then we get the change of character, come back into the supply zone, right. Let me just get rid of these drawings so you can see it. So we have supply here. Price comes into the supply, right, fails to make that lower low. We get the flip, the change of character, back into demand, and then we are off. So yeah, these lows ended up getting swept, and what we actually ended up moving off towards was that kind of first fractal flip that occurred, right? Because we were bearish, supply was in control, and then we would have had lower time frame supply over here, right? Price comes into it, reacts, and then we go away. So then we have these buy to sell wicks here. Just put that on there, and that's eventually what we then came into. Then we got another flip, a change of character, and then we got the movement away there. So let's head back up to the 4-hour chart, and then if you're in any positions down here, you are golden to try and target that. Well, ideally the long-term target is to try and get that swing daily higher high, right? Of course, it's quite a long way. We want to try and pay ourselves along the way. There's no guarantee that we're actually going to make it up there, especially after coming off that major weekly supply level, right? But we start to get the 4-hour switching bullish again. So at this point, that would be the highest, the lower high, right? The highest point before that low broke. So then we now get the 4-hour switching bullish. What do we expect after a 4-hour higher high? We expect a 4-hour pullback, right? After, what do? We tap into tons of liquidity and we come off this supply zone here, right? So we have the whole 4-hour supply zone there, or of course you can refine it a little bit more, which we can see price then eventually reacted to. Why was this zone a strong zone? Well, we had inducement above it over here, right? When the zone was created, it's ideal that we see liquidity sitting really near it. Also, it was a sweep zone, right? It's a bit more fractal, but how was the zone formed? Well, price came down, be clear on the 15-minute time frame, of course. It then pulled back because it failed to break that low. Then it took the low, right? So the low got the low got taken. So, you know, on intraday, there'll be tons of liquidity forming up behind that lower high, right? Because a reasonably strong lower time frame high, because it took out that low there. So all that liquidity is building up above that high. Price then comes up, taps into all of that liquidity, sweeps all of that liquidity, and then that fuels the move to go right. So that's why we have that liquidity being taken, and that becomes our strong 4-hour supply zone with inducement. We tap into that. We then start to get our changes of character, right? Price pulls back up into supply, excuse me, and then that starts to initiate that deeper pullback that we expected after a 4-hour break of structure. So what we can start to look for, of course, we can start to trade this to the downside, right? Whilst internal structure is starting to switch bearish, as we start to take out these lows, we can start to trade this counter trend pullback and just wait for, you know, that change of character again for the internal structure to switch bullish, and then we can expect that 4-hour swing high low may then be in place for us to then target that next 4-hour higher high, and then potentially all the way up to getting that daily swing higher high again. So just to summarize, we've swept in, we've taken that inducement in front of our daily and 4-hour zone, which was a sweep zone. We've tapped into there. We looked at how we could have timed that on the 15-minute chart, right, to get that that trade to take this long, targeting that 4-hour higher high as our kind of first real decent swing target. What do we expect after a 4-hour break of structure? We expect the 4-hour pullback. What can we help us to define when that 4-hour pullback is likely to start? We get a change of character. What happened? We pull back. We just wicked the high, took the high. That means we have a minor low here. We get our change of character. We pull back up into the supply that caused that, and then we can start playing that pullback right down into demand zones. But what also helped us, not just a change of character, but it comes off a decent supply zone. This was a sweep zone, right? It took liquidity. It has inducement in front. It's also a flip zone, right? Because we have this as our area of demand. So price came into it, took liquidity there, flipped, chock, right? All of these concepts, can you see how they just apply everywhere? And it really helps us to refine and understand why price is reacting, strongly from these zones. So, one exercise you can do, this goes for any pair, any asset class, blah, 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 right, is go and look at these big turning points in the market, right? Here and here. Yes, you can go and focus on these and study these, but just when you're starting out, really focus on what, big money has to really, I'm talking massive amounts of money, especially in these major currency pairs. It takes a shit ton of money to cause price to react like this, especially a move like that. So if you go and just circle all of these big turning points on your charts and then go dig down on the lower time frames and just really trying to understand why is this happening. Look for those confluence that happens: inducement, liquidity sweep, flips, right? That's where the change of character occurred. It came from that mitigation, right, in more of the premium, the EQ of that prior range, right? So it makes sense if you're following the money that these are the areas where there's going to be big money within here to then initiate those larger moves, right? So then at this point, what do we have? Price is pulling back. Kind of first real clean 4-hour zone we have is probably this area here, right? We can refine that to the fractal wick because it's the buy before the buy. So we know likely there will be that lower time frame sell that we can, just refine price to. What else do we have? We have this inside bar. What increases the kind of probability of this inside bar? For me, it didn't really take liquidity, arguably something below these sell to buy wicks. It's not the cleanest in terms of the 4-hour, but it's definitely there. What I kind of more like about this 4-hour zone is that there was this 4-hour supply zone here, right? So it's the flip zone. Price came in, it reacted. That caused the flip zone to fail, right? Even here, what do we have? Price initially comes in, it reacts, it then wicks that reaction. So we didn't get a candle closure below, but it definitely starts to show that reaction started to fail. We then come back into that supply. Then we actually get the candle closure, right, below that reaction there. Sorry, it's getting very, very messy. Let me draw this on, right? We get that. Let's get this 4-hour on, make it dashed, right? That's the reaction failing here. So at that point, what do we know? Now we really know that the reaction is starting to fail, and we end up coming up to that last point of supply, right? That fractal refinement. We tap into there, and then we're off to then form that lower low, right? So on and so forth. So let's kind of take a look in 15-minute price action and see, potentially how we could have been looking at trying to catch any 15, well not 15, but any of those 4-hour high lows as price was coming in. And again, you know, that's a massive 4-hour zone, so you can start to refine it. And what do we have here? We have this massive wick. What did that wick do? That wick took the liquidity below that low, right? It came down, took the liquidity, and that fueled the move to the upside. Remember what I said about pound dollar? It loves to kind of form what looks like it's going to be that higher low, and then it comes down, it sweeps it, and then you get the real move, right? So yeah, pound dollar absolutely loves to sweep liquidity. So what we can do is refine that 4-hour zone to this M15 wick, right? But even that is quite a large wick. You can see all of that inducement building above it. Eventually price taps into it, right? It sweeps all of that liquidity, and then you get that aggressive move away, and then we can refine that all the way over to here. But I'll tell you what, let's see if we can, you know, this is what I'd be doing in a live market. If I have a massive zone, I kind of want to try and refine it as much as possible. So let's dive into there, and hopefully the 1 minute chart will load for me. Let's take a look. Okay, so what do we have? What actually took liquidity, right? It took the liquidity below the low. We have this fractal refinement down here, which we can then draw with our M1 zone. So now let's draw this across. We obviously have inducement here, right? With these lows here sitting above it, which is nice to see. And it's still fresh at this point. So just going to zoom out and drag this across. Okay, what I'll probably have to do is just paste back forward again on the 4-hour till we get back there. So we start to react from 4-hour demand, right? We wick the low, we start to get that first initial sign that the reaction is going to fail. Then we get the closure above it, right? Then we pull back up into that fractal refinement, and now we come down into that next demand zone. But what we were looking at is just refining this wick, just to see if we could have tried to catch any potential high low that obviously could have formed at that point. So let's open up the 15-minute chart again, and then drop down to the M1. I don't think it's going to load for me, is it? Oh, it is. There we go. Right, now we got it across. And that is where we can see, right, refining that whole time. That's why we get such an aggressive move away, because that is the origin of the move. Yeah, I don't think it's going to load for me, or is it? Yeah, there we go. That's the origin of the move on the M1 that took liquidity and fueled that move to the upside. So yeah, this is definitely a good area that we can start to look for potential longs, right, to take that long position to the upside. But what you have to remember at this point here, whoops, keep going to the wrong zone, is we go on the 4-hour chart. Although we have refined this 4-hour wick down to that M1 zone, right, it's just more of a kind of an exercise to show you why we got such a violent reaction. But you have to read what's going on in the higher time frames. And this is what I was saying, right? Understanding your flips, putting all of the pieces of the puzzle together, that is the reaction that should go. The reaction has failed. We've then pulled back up into that last point of supply. So yes, we still could go from here, and that's why longs can be worth taking, but you just have to understand why in this case it didn't work out, and we ended up coming even further. And again, this is where then we got that true sort of 4-hour internal break of the low, right? Because this is our swing structure, this low here, and this high here. But then we take out this sort of more minor low, right? That internal low. We get that minor break of structure to the downside. That's kind of where that last flip happens. Price then comes down, and now we're pulling into this flip demand zone here. So for me, I would still be looking to try and catch that 4-hour high low with long positions that do set up. But really, I kind of want to see, you know, these 4-hour highs start to break to really give me that indication that the 4-hour high low is going to go, and that we're not just kind of having short-term reactions, just to provide more liquidity for price to then pull down deeper into those zones down there, right? So that's kind of my thought process. We're coming into areas of value. I'll look for longs, but really in terms of management and stuff, right, I want to see these highs start to go. This kind of last area where that last bit of sort of flip happened, I want to see price break that before I've really got conviction that we're now going to start to gun for that high there, okay? So jumping down to the 15-minute time frame, as price is coming down and towards the zone here, right, what we can start to look for potential entries shaping up. So let's just refresh this a little bit and try and get this so we can see it. There we go. So price is tapping into our zone. Now I just want to see the kind of, you know, some real solid bullish price action on the 15-minute chart. Still very much bearish at this case, right? We don't have any sort of change of character. Right, now what we've started to do, coming into London session as well, always be, you know, cognizant of session timing here. London session is sort of the ideal time to be looking for entries, but we have these pretty much perfect equal lows that formed. Price has now swept those equal lows, so which is really good. Now I want to start to see those kind of changes of character to the upside. So again, we're still very much bearish at this point. Building more lows, sweeping those lows. All right, bit more on a smaller case, but we can see it there. Be obviously a bit clearer on the 5-minute chart, but nonetheless, that is still a decent liquidity sweep, aggressive reaction away. All right, and then we start to break structure to the upside. So what I'm actually going to do is see, all right, if the 1-minute chart will hopefully load for me, how we could potentially see if we can get a 1-minute entry on this area. So now you can see how much clearer that support floor is, right? Tons of liquidity will be building below there. All right, just chopping around at this point, building liquidity on either side of the range. That's when we get that sweep below the low. So let's now pay attention and see if we can see a 1-minute entry. So price is pulling back up. We're now in that last kind of area of supply. Let's see if this supply is going to hold. So we're starting to react. Remember, the reaction is key. Right, so that kind of validates that the supply zone is a decent supply zone. We have now wicked above it, but for me, we don't have that change of character until we get a break of this high here. All right, but of course we do have that failed reaction. However, it is just a wick break. I personally prefer to kind of see that candle closure above in most cases. So yeah, we still haven't had that change of character. Now we get the closure above, so now we have that confirmed failed reaction. So you could start to look for entries, but let's wait for that A+ setup. Let's see if we can get that change of character as well. Right, so you could have potentially entered there, but we still don't. Oh, we have got that change of character now. So at this point, right, this zone is already mitigated, right, because it tapped into to cause that change of character. So now we can start to look at more of the extreme, right, because we have essentially this acting as inducement potentially for this price to come in towards this zone, which is the origin of the failed reaction and the origin of that change of character. And remember what we know about pound dollar is it generally, not always, but it generally prefers to kind of come to those extreme points. It can have reactions from more of the decisional, but it prefers to then use that as inducement, right, building liquidity to then come down to that extreme. So remember, at this point when we did get that change of character, yes, you could have been looking at here, but for me, it was already mitigated, right, to cause that move. So now this becomes potential liquidity for this zone to play out, or, potentially we could be coming lower down to the extreme here. I like this as kind of just a standard structural entry because it was a nice sweep zone, but there's no real kind of flip down here for me. And we haven't had that convincing of a break of structure just yet. It's more just a wick change of character on the M1. But in terms of this price action here, we've had that interaction of buyers and sellers. We have inducement. What did we also do when that zone was created? We took the liquidity below that zone there, right? So we have a sweep zone, we have inducement, we have a failed reaction, right? We have a flip, and we have a change of character. So that's how you can use kind of all of that confluence together to give you, good indication that this is going to be a decent level to trade from. So of course we can enter anywhere within this range. Now, as you can see, just covering below that low there is a 1.5 pip stop, which in this case may look pretty safe. But one thing you will probably find is something that I definitely found out through the hard way with pound dollar is I personally pretty much never go below 3 pips on pound dollar. You'll find the average true range on this pair. If you don't know what average true range is, essentially it's just kind of a fancy phrase for how many pips a day a pair typically tends to move. That's just kind of what ATR is, average true range. So a pair like euro dollar, if you go and kind of measure each day, you'll see compared to pound dollar that euro dollar moves a lot less in terms of pips. So what that means on here is if we know that pound dollar tends to move a lot more in pips each day, is that actually 1.5 pip stop on here is going to be like a 0.5 pip stop on euro dollar. So for me personally, I tend to never go below 3 pips. And yes, at times it can be unnecessarily big, but I found over a large sample size of data that generally 3 pips is for me. Now for you, you don't have to follow that, right? If you find you're very accurate and you can get away with smaller stops, especially if you're a trader who always enters on the EQ as well, then do what works for you. But I can only advise you guys kind of what I found, and for me, I wouldn't go much lower than 3 pips. It just tends to work a lot better. So let's see if this is going to work out. Okay, now we've got a pretty decent move away. So here's a very good example of where 3 pips can save you. So in this case, this was as far as I'm concerned, this was the wrong demand zone because demand failed. If it's the right demand zone, price should never even wick the low, right? But you don't always have to be perfectly right, and giving you that little extra bit of buffer can help you, manage to stay in these trades and not really affect your risk reward too much. Yeah, and that's just kind of what I have found works best for me. And in this case, that zone did end up being used for liquidity, and we've reacted to something in here, which we can't see on the M1 time frame, right? But there will have been demand here on a lower time frame on the seconds. So I'm guessing, right, we had these buy to sell wicks. There would have been some 5-second demand there. There was probably a flip here that then led to that, that 5-second break, and then that's what price has come down to mitigate. But obviously, I have no idea. I'm not going to be sitting in the 5-second time frame trying to find every single zone. I'm just reading it on the M1. That's more than enough for me. Giving you that 3-pip buffer as well allows you to stay in trades like that, where you end up, it ends up becoming a sweep. But in my opinion, this is still a very, very high probability trade, right? Big sweep of liquidity. We're in that 4-hour zone. Nice aggressive in and out, which is what I want to see, right? We got that failed reaction. We got that change of character. We have inducement with equal lows. We have inducement in the leg. We swept liquidity to create the zone. That for me is all systems go to want to, risk my capital on a position like that to try and get, that decent move there. So yeah, that's kind of one way you could have looked to trade that, and just a good idea to give pound dollar a little bit of a buffer, because it does love to absolutely sweep liquidity. Now, as we're starting to break up higher, remember what I was saying? Yes, there is a possibility the 4-hour could be forming a higher low, and if you are in any longs, I definitely would be looking to try and hold some volume to get that higher high. But one thing we have to be aware of is we are still in premium pricing, right? We haven't come below that EQ down below there, so there is a possibility that we could come down lower, but so far so good. But really what I'd want to see is a 4-hour started to kind of get those minor breaks of structure and break those kind of last areas of supply, because remember we had this point of demand here, price reacted and then pushed down. We did mitigate some of that supply, but there could be enough supply left within those wicks. Pound dollar is another pair that loves to come up and mitigate wicks, so really I want to see price break that, because there is a possibility that this could just be used as inducement to react from here and come down lower. But if we can break up above here, then I'd have a much more conviction that that's the high low, and then I'd be looking to hold on to the majority of my volume to try and take out that high there. So if we are within trades, and we're going to start to look for potential areas to either take profits or look for short positions to hedge our long position. So we can see already, right, these lows, this liquidity ends up being used for inducement. We start to sweep those highs there. So a couple areas you can look at. Obviously we've already reacted from this one, but we have that M15 zone there, and then we have the 4-hour wick, which we can then refine to, for me is all mitigated. Then we have this zone, so that would be the next zone I would look at, right? That's taken the liquidity behind this high here. Right, it's mitigated that high, the previous high, and then we've got that movement away. So these are two pretty good zones to be looking at. In fact, let's see if the M1 will load for me, and we can refine those zones even further, right? These two zones over here. So let's have a look here. So you can see this one's decent, right? Took liquidity, flipped, broke the low. So that would be a decent M1 refinement that we can look at there. And then over here, very, very clear one, right? We've got this inside bar here. Nice inducement in front of it as well with these highs here. Really like how it swept that liquidity that I've already drawn on. That was visible. Whoops. Get rid of that double zone. This here, right? So we took the liquidity of that high, and then that ended up going. Obviously inducement here as well, and here as well. So really nice zone there. And then all of this is pretty much mitigated, right? We came in, tapped that supply, we've come down. We swept liquidity, right? So that's a sweep zone here. Prices then come down, use that as inducement, and it's mitigated this zone. Then we've come down again, mitigated this zone, right? So we're just following the money. This is just a series of mitigations. So this should be kind of the the last point of supply that should hold if the 4-hour is going to continue to pull back. If we start to break these highs, then the higher low is in place, and that's where we can hold with conviction up towards potentially forming that swing higher high, right? So if we drag this across, right, already got that initial reaction there, and let's see if this will play out over here. So yeah, it's not really too clear of an entry here. There's definitely be something there on the lower time frame in the seconds, because you can see price comes in, it reacts, it pushes down, we get the change of character, price then pulls back up into that area of supply, right, and then we go away. So there would have been a 15-second flip zone there. Here's kind of your more of your clear M1, but we kind of push straight through, so there's no reaction for me that I'd really like. Arguably it's not great because we actually broke the low before before we reacted, but potentially these buy to sell wicks, there's demand there, so we have a bit of demand, we push down, we get that change of character. It's not the cleanest, so I wouldn't have had massive high conviction with that one, but what you could potentially do is play the reaction, so we come back into it, we actually even come into that fractal refinement there, and then if I just bring it back, this will be a bit easier to show you bar by bar potentially how you can look to play this. So yeah, this really isn't a great setup, but it's kind of show you sometimes you can trade the market a little bit ugly if you really liked an area it was coming off. For me, it's not the best because there's an extreme above. The extreme is where I'd be happy to be a lot more aggressive. The decisionals, like this M15 decisional, not so much. But anyway, let's have a look just so I can show you kind of some sort of messier price action of how you can read it. So at this point, whether you'd refine it to the wick or the whole candle, it doesn't massively matter. What you're looking for is the reaction, right? So now we have that bearish sell-off. Now we kind of have that bullish reaction again, so it's showing you that demand has stepped in somewhere. So this is where you have to kind of be, really, if you're looking to just play a reaction of an M1 zone, you have to be kind of really focusing on the details here and really diving in, because what you are doing is you're trying to read the seconds time frames, right? The lower time frame on the M1. So we've come up into supply, we've reacted and pulled back, then we started to push up, which means there must be demand here, right? These sell to buy wicks. So we're pushing up here. So now what I would do is I would mark that out as the low of my reaction, right? I would want to see that reaction fail. And as long as price doesn't take out this high here, right? So what do? Yeah, we don't take out that high, so it hasn't done its job. Now we've got a closure below. So then for me, straight away, I'm looking to get short anywhere, essentially, within this buy to sell range here. Let's see how big that is in terms of pips. So 3 pip stop is ideally what I'd want. So what you can do is move it until you get your 3 pips above the high there, and then let's see if we're going to get tagged in or not. And no idea, I can't remember if this comes up. Just about to get tagged in. Ideally, hopefully you did with spreads, and then that would be your move there. And then we take out that M1 low. So then, again, we'll talk about management later, but you're running over 6R. So yeah, ideally you'd want to take some partial profits, cover your risk on your trade. As obviously, yeah, I believe this does end up pulling back up, but let's just play this forward a little bit just for the sake of time, because I'm conscious this video is going on very long already, but we know, yeah, that ends up pulling back. And then we come up to the extreme here. So one thing I would say about this is if you are the type of trader who wants to be a bit more hands off and just kind of use limit orders, this is the type of zone you want to do it, right? Not so much from the decisional, play the reactions from the decisional, right? That's what I was saying at the start. If you want to set limit orders, of course, you can then take them from the extreme, whether you want to be very risk averse, have it above the 4-hour high, or if you're a bit more happy and you have confidence in your refined zone, right, then you can take it from here, or you can get rid of that phone call, or you can do is take the EQ, right, and then you can, double your risk to reward instantly, but you of course run the risk that you may not get tagged in, and in this case, it ends up, do we see, does it play out or not? Struggling around, and then we start to break structure to the downside again, right? And then the M15 switches bearish. So at this point, when you get the M15 switching bearish again, right, and then you look at the 4-hour chart, remember you've always got to try and take at least these two time frames together. What has happened? Well, we came into our supply to demand flip zone. We knew it was in premium pricing, so it wasn't ideal, but we looked for that long entry because it's pro 4-hour and daily and weekly trend, and there was a good possibility we could go on to run the highs. But what did we have? We kind of had this last remnants of this flip zone here, right? The decisional that truly caused that minor breaker structure over here, right? To actually make the internal trend, because the internal trend was bullish at the point. That is where the internal trend then switched bearish. This high was then used for inducement, right? You can kind of view that as one 4-hour internal leg there. We've come up into those wicks. We can look for potential entries to hedge our long position, right? Because we're still thinking that we could go from here, but then we get in some long positions. And then once the M15 then took out that low, right? And the M15 switched bearish. For me, what's happened is the 4-hour, this 4-hour internal low, it's failed to even take out that high. This low now is toast, right? That low is, I've got very, very high confidence that that low is going to go. And this is where you don't really want to be looking for longs from here, right? Because it's a weak low. You're trying to get long from that weak internal low. It's not ideal. And yeah, price ends up running it, right? And we broke below that low. So now what do we have? Well, we have this 4-hour low has now been taken out, right? So we now have a reaction failure. We have another, make this a dotted line, dash line, sorry. Get rid of that drawings. There we go. So remember, this is our demand. We react, we fail to put in a higher high, we come back down and we close below that reaction at this point here, right? So now we have a failed reaction. So this means technically anywhere in this whole buy to sell range, we have the supply that caused that reaction to fail. But obviously I want to be a little bit more refined from that. So of course you could take that whole bullish candle, but for me it's not great because I ideally prefer to see a candle that closes below the low, right? Which we don't get. So then you can refine it to here, but none of those candles close below the low, and then you could refine it to that candle there, right? But then the candle gets swept. So what I was talking about is, let me just draw it on so you guys can see exactly what I'm talking about. So you see how this candle here, if you take that whole, that's valid as well. That's more than valid, but ideally I prefer to see the candle close below it, right? And then we can refine it a bit more to this candle here, because this candle does what? It takes the liquidity behind this high here, and then it leads to that flip occurring. So I really like that, but it is a bearish candle before a bearish candle. So what can you do? You can refine that to the wick, because it's likely there'll be the buy before the sell. So we put in here, that 4 hour liquidity. There we go. That's the wrong one. No, I think it was the right one. Anyway, let's jump down to the 15-minute time frame and see if we can refine that a bit more. So you can see here how clearly that price action occurred, right? So forgive me, I'm jumping around a bit here, but that was that trade there that you could have taken, right? So we got in, we looked initially for that long. Ideally pay yourself on the way up, then you take the head short. I'd be taking a fair amount of volume off around here in case that M15 does actually stay bullish and we do put in that higher low. So again, we can be looking for longs within here, right? Sweep of liquidity into our demand zone in here. But then ultimately, what does it do? As pound dollar loves to do, sweeps of liquidity, mitigates those buy to sell wicks there, and then we run the low. So when we run the low here, if you have any volume remaining on the trade, that is when you can have confidence that this weak 4 hour low is going to go right, and that's when you can then end up getting over 20R on your remaining volume. But here, this is why this is a decent 4 hour zone now, right? It's taken the liquidity and it's led to that move to the downside, right? Essentially, you have your M15 flip as well, reaction to demand, failed reaction because it failed to take out that high there. So then anywhere within these buy to sell wicks essentially is your supply that then took out those lows, right? And then you can start to dig into the M15 time frame and look for price to to look to trade those shorts. But I'm not going to do that for now, just because this video is turning in very, very long. But I kind of just wanted to just to use this video on pound dollar, just to bring in the same simple concepts we've been using, right? Looking for how to mark our swing points, how to look for where those flip zones are, and then how to just refine those even further by looking at the zones that have inducement in front of them and the zones that took liquidity, swept liquidity before they are created. So then we tap into there, right? And then we go. Now again, this is another point I really want to make. You don't have to be super, super refined, right? You can keep things very, very simple. You can go, okay, you can literally ignore everything I've been saying this whole time in terms of liquidity and just go, okay, well, we're starting to switch, that bearish internal structure on the 4 hour chart. We're making those internal lower lows and lower highs. I know the 4 hour chart could be putting that swing high low in at any point, but I'm just going to wait for the 4 hour chart, the 4 hour internal price action to start to switch bullish. So you can look at these kind of larger unrefined supply zones and you can literally just hit sell on the EQ, right? And you can be as hands-off and as simplified as you want. There's no need to get super, super complicated. I'm more just showing you how you can start to bring in those refinements, get more and more refined, go lower and lower time frames. Because obviously the lower you go, you're gonna, if you take this 4 hour zone and you jump down to the M1, there's gonna be tons and tons of potential valid zones. So that's why you have to use all of your knowledge to try and refine it as much as possible if you're gonna try and take, a 2 pip stop. But you don't have to. You can literally be this hands off. Look, just to that low there, that's 5R. Do you know how many people would kill to have a 5R trade, that hands off, right? As soon as we break that low, set your order on the EQ, stop above the high, wait, 12 hours to get tagged in, and then another, what's that? If I can get the tool to work. There we go, three days, sorry. Yeah, and then you've made 5R, right? Hands off approach, you set your limit order there, you tagged in, you set take profit there, or maybe you want to push even further and you're going to wait for the 4 hour internal structure to switch bullish again before you go, right? So just kind of wanted to really make that point, especially if you kind of just joined and some of this is very, very overwhelming, because it definitely is. It can really take a while to grasp all of this. But in the meantime, whilst you're learning that and you're getting more experience, don't let that put you off. I've been showing you 1.5 pip stops, 2 pip stops here, right? You're going to see how possible it is to do this all the time. But this is even I've spoken about this to a lot of you guys in the community. Sometimes I have to drop my ego, and sometimes I ask myself, when I look back on the week's price action and go, was it really worth kind of me spending all that time in front of the charts where I could literally just see this zone, put my entry order on the EQ, yes, it's a 14 pip stop, drop my ego a little bit, get a nice trade, boom, there's 5R, right? Because that is an unbelievable return. Like, it's very easy to get caught up in these massive 40, 50, 60 trades, but 5, 6 are there. When you start to have that decent capital, right, that is a ton of money. You can make more than someone's annual salary in a Western country just with that trade alone there. And it's so simple. Just understanding what's going on here, right? We've come into demand. We tried to make a higher high. We failed to make a higher high. So we have a failed reaction. The bearish internal flow, order flow is commencing. So we take this big unrefined 4-hour zone, enter it in the EQ, stop above the high, partial or full take profit there. Boom. You can make, 6R on £1 million account. Yeah, do the maths on that. It's insane. It's 60 grand, just like that, right? And you will see these entries occurring again and again and again when you have confidence and marking out your structure, understanding order flow, and understanding these reactions of what is going on. Anyway, I don't want to rant on too much, but I'll tell you what we'll do. We'll just kind of bring the 4-hour and 15-minute chart kind of nearer to today's price action. So let's say you're short, regardless of whether you got on the 4-hour or the 15-minute, blah, 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 blah. It doesn't really matter. We've now made a lower low. Let's start to look at areas where potentially we can start to, guess where, not guess, but anticipate where, that 4-hour swing low may start to form. So really like this 4-hour extreme zone down here, and then we kind of have this 4-hour range here that price is approaching. So what I'll do is I'll jump down to the 15-minute chart to start to refine this, and let's see what we can find down here. So what I'm looking for really is those M15 zones that took liquidity and have inducement in front of it. So I like this, right? It took that low there, right? Swept it, but when the zone was created, right, it made that high, it came back in and it's been mitigated. So that zone's already gone, so I'm not too interested in this. This is another one I like, right? It took liquidity, made that high, but it's been mitigated, right? Price came back in and it went. So we would have ideally have already traded from that back in July. Then again, what do we have here? We have a sweep of liquidity, get that high, and it's not mitigated. So boom, straight away, I know that is a potential zone I'm going to be interested in to, at minimum, play that pullback or ideally try and catch that higher low. What else do we have here? This one didn't really take liquidity, right? It's just a mitigation because we have demand here, right? But it didn't sweep any liquidity, right? This kind of just inducement way above. Kind of want to see it nearer down, right? We just come down, mitigated it and carried on. So that's not really that high probability of a zone for me. Of course, you can mark these on and look, drag them across and see if you get a reaction. But, you will honestly find the ones that take liquidity and do that, they are the ones that have the strongest reaction. So that's the old demand 4-hour zone that we were looking at before. So this is where the new reaction came in, and what do we have here? So I'm going to rain that in even more just so you guys can see it. So obviously that was the last mitigation, and then we moved away here. So if we follow the money, what do we have? We have these relatively equal lows here, even if you just draw that low there, right, which mitigated this demand there. Price has now swept it, and then we're off. So let me draw that on. There's your M15 liquidity sweep. Now you can take the whole candle, but it's a bullish candle, right? And obviously the body's been mitigated. So this is definitely one where I'd then take that fractal refinement there on the wick. So what we can do is we have now refined that extreme 4-hour zone to an M15 zone, and we have this zone here to potentially look for a reaction. And remember, if we go on the daily chart for a second, zoom all the way in. All right, remember we're coming off this sweep zone here. We had that movement away. We got that internal daily high. We're pulling back and we're trying to catch that daily internal high low to try and get potentially that daily and weekly high. So what we also have is, we can draw this on, right? It's a daily minor zone because it took out a daily minor high, right? This demand zone here. And then what we have done on the 4-hour chart is we just refined that massive daily zone down to that 4-hour wick there. So I'm going to leave that there and just delete this daily zone for now. So we have an M15 zone that we've refined to within here and one within here, and that would be kind of the major areas that I'd be looking at for potentially price to start reversing from. And I dragged those way too far across. That's going to hurt my chart OCD. So let's see. And even if you don't have these super refined zones on, you've just taken that whole 4-hour range. What do? You just wait for structure to start to show you that it wants to switch bullish, right? You don't have to be super refined. I'm just showing you the possibilities of how you can start to do this, right? So let's see if the M15 is going to switch bullish or if this zone is just going to completely get disrespected. So you can see here as well, whenever you see price ranging around, a lot of the times it can be, see, Asian session, right? This is the start of the Asian session just after spread hours. So it's very, unlikely you're going to see trading opportunities here on a pair like pound dollar. So we're starting to break structures to the upside. What time is this now? So still the Asian session, so I wouldn't be looking to trade this personally. All right, 6 6:30. So now we're coming into sort of the time, 7 a.m. right, Frankfurt open, and that's why we're starting to see these aggressive moves away. So what do we have? We have actually kind of your first real aggressive change of character, right? That's the inside bar. So for me, that is a minor high. So the M15, we've had that chock. We've also kind of had that minor highs there. A lot of kind of volume starting to come in, right? We had that higher high. We have the mitigation of this inside bar, right? Nice big wick, right? That shows sort of that big money starting to step in. So let's jump down to the M1, see if we can look for potential entries here to try catch that lower low. So we've swept all of this liquidity. We've mitigated around this area here. We haven't quite come into that zone, but we've had a sharp movement away. So what I would want to see is that M1 change of character. Let's see if we can take out this high here. Just going to rein this in, see what happens. So we are clearly reacting to supply. So let's draw these on with our proper colors. There's your M1. Right, so we're reacting to supply. So, you know, technically that was your first initial reaction, right? But we never got a closure above it. So personally, I want to see that closure above, and ideally that change of character as well. Now we have that failed reaction. Now we have that clear change of character, and we're really starting to move away. So let's take a look at this inside bar here. Now, why is this a decent inside bar? It led to the origin of that reaction failing. We know pound dollar likes the extremes. So reaction failed, we've got that flip occurring. It also caused a change of character. We have inducement here, right? Ideally just above it as well, which is perfect. And what also do you notice? When it formed, it took liquidity, right? We have that liquidity sweep there. So there's your M1 liquidity sweep. Happy days to look for an entry on this. It looks like quite a big zone. Let's see, 3 pips is generally what I try and go for on pound dollar. So what I would then do is just make sure 3 pips is below the low. And then let's see, hopefully, if we can get tagged into the trade or not. It may miss me. Let's see. So we're just building more liquidity, and then we're tagged in, and then we go on to make higher highs. So yeah, that's one way we could look to then capture this trade. So let's hop up to the 15-minute chart and see if we can start to break structure to the upside. So really what I want to see is price start to kind of make those higher highs and really start to sustain that move. Okay, we got that higher high. We've come into demand again. There's probably likely more trade entries within here, but I'm not going to look for them. Let's see if we can continue to make higher highs. Now we've got that break of the low, right? We started to switch bearish again. So, you know, another thing as well that you have to bear in mind is this is not a great sign of a swing low, right? You see how it's performing very, very poorly. So I'd be a bit cautious at this stage, but we are continuing to make higher highs, starting to react from supply here. And then let's see what happens. Right, and then we sweep all that liquidity and we come lower. So of course, if you got in here with, you know, 3 pip stop, roughly you peaked at 50 pips or 40 pips or so. So there's some decent R to take advantage of, right? Definitely pay yourself along the way. But yeah, it would have been more than valid to try and hold on to that and try and get that higher high. So now we've broken below those lows. So now I'll be all eyes really on seeing price coming down towards this extreme here. So let's play this forward and see what happens as we come down towards these lows. So we're starting to react a little bit. We're starting to build liquidity as we come into that 4-hour zone. Now, what I'll say, right, is when you have these kind of refinements that you make and you find, you know, this nice, perfect refined zone, price does not have to come down in here to form that higher low, right? So the reason why we use refinements is just to give us more confirmation and more confidence. So what I mean by that is, let's say price comes into here, right, in the 4-hour zone, hits the EQ, but misses this zone here. But it does everything we need to see. It starts breaking structures upside, giving us flips, giving us all our entries. But you can go, well, it never touched my zone, so I don't think it's ready yet. I think it's a fake move. Yes, you could be right, but a lot of not. Well, sometimes it won't be, and it will go, and then you've missed the move. But the way that I personally use these refined zones is that when price comes into here, because I have a lot of confidence in the zone, this means that I'm happy to take that first M1 change of character, or, you know, potentially even a 15-second setup, right? Because, you know, I see this as the last point of demand that has to hold. So that means I can be a lot more aggressive. But if price comes into here, it sweeps liquidity and we start getting changes of character to the upside, I'm happy to get long, but I've kind of waited for a little bit more confluence in terms of I'm waiting for the M15 to switch bullish, rather than just the minute we come into the 4-hour zone, I'm looking for that first M1 change of character. Because that's why you can take very early losses, right? Because it's most likely you would have been looking at that zone there, right? Because it took liquidity, movement there, that would have looked very decent on the M1, and you've taken an early loss. Because generally that first M1 move from a higher time frame zone isn't going to be the zone that goes right, because price needs to come in deeper. fill more orders, build more liquidity, right, for price to then sweep and go. So again, just to make that kind of super simple, I'll have this higher time frame zone that I like, whoops, and if I start to get, the M15 changed in character and whatnot, then I'm happy to look for entries. But what the refine zone helps me do is once price enters here, on the M1, I'm happy to get very, very aggressive and then start to look to get in, okay? So we're still kind of staying bearish, building more liquidity, right? Nice, perfect sort of equal lows here. Let's see if we can get that kind of... Okay, see, aggressive in and out now, right? There's literally no questions that big money has stepped in. We have that sweep of liquidity, right? This liquidity took, this zone took liquidity, caused a change of character. So this will be the last little thing we look at. We'll start to wrap things up here. Now, what do we also have? It also took the liquidity here, right? Just again and again and again. We have our change of character. Nice, decent break of structure. So let's look on the M1 and see if we can look for a refined entry. So anywhere within this blue box, I'm now more than happy to take an M1 entry, right? So let's see, what are we doing? We're just building more liquidity, right? All below these lows here. Stacking inducement in front of our zone, which is what I like to see. Okay, prices come into our zone. Okay, we're still bearish. Okay, now we have that change of character. So this is where you start to really investigate price now. Well, what has happened? Well, we've had this big sweep of the lows. We've come into our M15 demand zone. We've swept liquidity here. Right, so we now have a potential sweep zone. It's not the cleanest, but we did have supply here. Price came into it. It did, yes, spike lower, which, is a decent sign that supply held, but we never got a closure below. So for me, it's a flip. It's just not the best flip, right? Because it did spike lower, but it didn't close below. And then we got that aggressive movement up. So now for me, that's a definite and very clear, M1 change of character. I like, how aggressive that move is. So now what we can look at is this inside bar. Obviously, you can take the entire range, right? Or you can refine it a little bit more to that inside bar, or you could even take the wick. But what you have to accept is you may miss the move the more refined that you go. So let's see how big this is. 3 pips generally, kind of what I want to do, cover the low there, and then let's see if I'll get tagged in or not. So what we're doing, building more equal lows here. And then we get tagged in. So right, so you could have been more refined because eventually price did come down. I believe, did it take the wick? Yeah, just about took that unrefined wick, right? Oh, sorry, not unrefined, but actual refined wick, the bit that hadn't been targeted, the unfilled orders that swept. Pound dollar loves extreme. And this is why, right, you might be the type of trader, if you really focus on EU, you can get away with less than 3 pips. You don't have to do exactly what I say. It's more just me, giving you guys advice of just what I found works for me, over a large sample size of trades, right? Don't just see one trade play out like this and go, okay, I'm always going to enter on the wick and I'm always going to have a 1.5 pip stop. You need to collect as many case studies as you can and then, look at the large sample size as a whole, the law of large numbers, right? What gives me the best edge over time, okay? So what I'm going to do is just going to, for the purposes of just showing you kind of more reflection of how I would personally trade, a bit more unrefined, right? Would have been tagged in more like that, right? And then, yeah, we're off. I mean, even if you weren't sure of this level, right, there's probably confirmation entries within here. What do we have? We have last areas of supply, we react, we push up, right? We get the failed reaction, we come back in, and there you go. Now you've played the confirmation of that zone holding. So you just waited again for a bit more, and then, confirmation, and then you could have got in with a refined entry there. So I appreciate it. Again, that's very, very messy drawing, but you can see here, and this will be cleaned up if you have the second time frame as well, but we come into supply, we react, right? That's your reaction. We break up above it. We don't quite get a change of character, so this is the more aggressive stance, right? Actually, no, we do. Ignore me, because that's the inside bar, right? So we pull back, we come down, we get a change of character, right? We react from that fractal supply there. Then we get the failed reaction here, and then anywhere within here you can buy right on that demand on that doji, and then boom, that's how you confirmed this area here if you just wanted to wait for a little bit more confirmation. So yeah, that pretty much wraps it up in terms of kind of everything I wanted to cover. Hopefully you guys can see, yeah, just kind of how pound dollar is a little bit, I'm hesitant to use the word tricky because I don't want to put you guys off, because pound dollar is an extremely rewarding pair when you master it and when you nail it, because when this pair goes, it absolutely goes, it flies. And if you can get into the 3 pip stop, right, this can move hundreds and hundreds of pips within just a few days, and you can make serious R, and you can, yeah, just where you get those quantum leaps in your account growth. But of course, just make sure you really get used to it first. You understand how it likes to sweep liquidity, and you get very, very comfortable with it first. And you understand the differences between a pair like this and a pair like euro dollar, which isn't as sweepy. It's not as sort of, it doesn't like to manipulate as much, and euro dollar can get away with a lot more with the decisionals there. So what I'll just do is, in fact, if I just kind of get rid of all of this and put it to the current price action, and if you just look at from where that move kicked off, if I refresh the charts, right, so that's how we were looking at getting in the move down here, and you can just see how much pound dollar loves to sweep liquidity, right? Because we go up, we have a minor pullback, we make that minor high, and what does it do? It comes down to sweep those lows to then fuel the move and go. Pulls back, right? Takes the high, then what does it do? It sweeps all of these equal lows to then go up above. Then what happens? Price comes back, it sweeps these equal lows, right? To then fuel the move to the upside. Price pulls back, makes a higher high, right? Leaves all these equal lows here, sweeps the lows, and then we go, right? It does, and even on a fractal refinement, what does it do? Pulls back, makes that higher high, comes down to sweep that low there, and then we go. It just does it again and again and again, and it just loves to manipulate, right? Come down, tries to make that higher high, right? Takes that higher there. You think it's going to come in for the higher low, but what does it do? It sweeps those equal lows that just built, and then it fuels the move to go, right? Again and again and again and again. So this is why you have to really kind of understand how much it loves to sweep liquidity, and when you do see that sweep, that's when you can trade them with confidence. So when we come down here, right, and you start to see these movements here, back into demand, and we're off, right, and then we can go. So yeah, just get comfortable with it, and yeah, it can be a very, very, very rewarding trade. When you start to master it. Yeah, I think that's pretty much everything I want to cover. So yeah, dive into it, study it. Like I said, when you first kind of keep into things, don't just do bar replay and try and play price forward, because you'll get quite confused. I will talk about this in a lot more depth in the testing module, but just for now, just go and focus on these big turning points in the market, these big swing points, and that is where you'll see those kind of more clear-cut opportunities, those high probability ones, that we wish to focus on. So I'll leave that there. Appreciate this was quite a long video, but hopefully you guys took some value from it. So as always, I will see you in the next one.